All right, good morning, everyone. We are back up and running. And let me turn on my light here. All right, that's a little better. All right, let's take a look at the market. Well, so yesterday sort of felt like a strong down day on the market, but that's because we're in leaders, and the leaders have finally become a bit exhausted. And if you take a look at like Palantir, one of the leaders, one of the prime leaders, it had a big sell-off day, and that was actually a topping, a gap open, push up, and then red back down, which is a signal, which is a topping signal. It's a reversal signal. And so whether or not it goes up today and then down tomorrow or down today more, we're probably in a bit of a pullback here. So I got knocked out of 3 positions out of like 80 as far as stops go. And some of them, like this one, I remain very elevated on. I'm up, what is this, Palantir? I'm up 14% from my stop. But as you can see, I mean, we've dropped 12% yesterday. So, another big sell-off day wouldn't be good. But, I would still probably, unless it went all the way to my stop beforehand, I would still probably wait until end of day to make any final decision if there was a strong ish sell-off today that kept me in. So we'll see how it goes. All right, I'm going to put up the Twitter stream here. So we got to see what gets put in today. What was that? Okay, see, now I'm taking profits on another thing in pre-market. Faro is apparently moving. Sometimes that could be a little arbitrage trade, but sometimes things move strongly without reason, just because of wide bid-ask spread. So I just got that. Was probably my fill 30-10. Let me see. That was probably me. Filled orders. Yeah, 30-10. That's what I got, 30-10. So if that's an anomaly, and then we're going to come back down here and trade at 27, I mean, that's just one of the beauties of making sure you have all of your orders set, all of your take profit orders, because I'm telling you, a couple times a week I get some of those where you're not really supposed to get a fill there, but you do. And now, just to make sure, I don't have any lower orders than that left, do I? Because that would be interesting. I do. So that's just crazy. I have an order at 29 and 29.50, and what just took was 30.10. So that's pretty cool. Who knows why that happened? These things can be perplexing, I guess you could say. Let me double check if my YouTube live has scheduled and gone out. It hasn't even gone out. Let me go check the YouTube, the Twitter, sorry. The Twitter, it does say it's going. There's just no post about it. So I guess I click on it. Yeah. And I gotta mute this. And then post about it. Don't think I remembered that I have to post about it every time. Yeah, I guess so. Boom. All right. See if that shows up in my feed. Yeah, there it is. Okay, great. All right. Well, let's see what else we're looking at here. So Faro did that. Pre-market, yeah, I've been watching CPIX. We also got to look at CMRX. These are some things that are up a lot in pre-market. However, yeah, I don't love their charts too much. Neither of them. So probably I will not be touching those. Let's see. QURE. Yeah, this one's not great, but maybe borderline. QURE. Let's see what else is up here. Way up high. That's up 91%. CRDF up 53%. CRDF. Okay. No, we don't like that one much at all. NAMS. NAMS. Nope. Pop and fading. That's all it's been doing. Gels. I mean, I definitely don't like this sell volumes, but I was just looking at it thinking that it needs to put in some VCP type of patterning. The only thing is it's a IPO kind of breakout. You know, and those can be pretty incredible trades. So we should keep that on watch, Gels. This is like the 1.5 month point after IPO on this one. And it's come back up and around and faded. And I mean, it's just really trying to break out the last week and a half. Gels. PCSA. Yeah, there's way too much sell volume on that. It's just been fading ever since initial pop. It hasn't even been a follow through to speak of. So we don't even pull that one up. We don't even need to be watching that one. VRAR. VRAR. Yeah, now we're starting to get the bottom of the barrel. I mean, that is 25% up, but you know, for day trading picks, for hot small cap type of crazy wild day trading picks, the cutoff is like 80%. It needs to be up at least 80%. But the thing is, it may have pulled back from there. So it could be up 60, 50, 40%. That's why I always look down and check. And there could be a nice pattern forming. But where it had pushed previously, like an hour or two ago in pre-market, to a maximum of maybe 80 or 90 or even 100 or over 100%. And you don't know that because it's pulled back, and the number that you're seeing as the pre-market gainer percentage might be like 47% or something. Don't discount that as being below your criteria for super magnitude day trade picks. You just have to look at them. So I try to look at everything. TRNR, because it only takes a second to look. NBTX. As you can see, most of these pop and fade. No follow through. Mob. SOAR is up like 14%. That's been, oh no, never mind. SOAR. Mob. Akia. We have 13 minutes till the market opens. Akia, nope. JTAI is probably an AI stock. Jet AI. What is it? AI airplane company? What is this? Jet AI engages the provision of business-to-business software platform for software as a service products and private aviation services. It operates under the software and aviation segments. So presumably it's software to manage your airplane company, whatever they call that. Your airline. And I think, they're going to have a hard time cracking that. See, the whole, much of the airline industry is, what's the word? I mean, I want to say subsidized. Yeah, but that's pretty much the word. So they're not really desperately looking for anything to gain competitive edge unless they're not subsidized, like if they're more of a private company, or like maybe JetBlue or something. But most of these big airlines, are treated like public utility companies, and if something happens, they get the bailouts. So because of that, it doesn't make them hungry, to go approach with seriousness anything that could have give them any competitive edge, because they don't need to. They've been sort of, that's the problem with welfare. It ends up disabling you. So they don't need to. So I would imagine if that's what this company does, Jet AI, if they provide airline software, management software, then it's probably, the dream and the vision of it was probably, to go like, man, all we got to do is just get one of the majors. And I don't think that's really ever going to happen. Maybe, but I wouldn't stake my whole career on it, Anyway, so that's JTAI. Not doing good this morning. Mob Pump and Google is up kind of strong. Let's go take a look at that in a moment here. Pump, no. Goog is up quite a bit. Was that earnings? It was that there was a dividend, possibly, it looks like, or there's going to be one later today. This is the ex-dividend date. Something, no, it was yesterday. I don't know. Actually, it's not dividend. It's not the dividend, and it's not earnings. But Google is way, I mean, as far as like how much Google could typically move in one day. Wow, it's quite a bit of move. In fact, I'm going to go over to my prop count and just grab them. Oh, I can't grab it until the market opens on the prop count. But I'm going to get some Google probably now. This is a really strong move on Google. I don't know what it is yet. We'll find out. Which one has more volume, Goog or Google? Google with the L. Okay. And so I will try and grab some, presumably with it for a swing, with a stop at like, I don't know, 175. So I can't really get a whole bunch of shares. Maybe 12 shares for $100 of risk on Google. Now, let's take a look at what the news is while that order is waiting to be filled. It's good to cancel, not during extended hours. I hate when I do that. Cancel. All right, try again. Now I'll probably get a quicker fill. There you go. See. All right, now the news is, let's see. They're trying to say that AI, some of the bad news on Google, AI, that Google has to watch out for gaining market share in the AI space. I don't know. But that's certainly not what's moving it. Allegations of targeted advertising to minors amid reported EU probe. Okay, another negative report. Fury Bell market chatter. Google takes down bad reviews of McDonald's after United Healthcare murderer arrest. Oh, did they finally arrest the dude? That's good. Google and Meta under increased scrutiny. No, this is not what's moving Google. It could have happened yesterday after hours because it started to move back then. But we'll find it. Let's keep looking. Looking into alleged secret ads deal with Meta targeting minors. TSMC posts 34% surge in November sales. TSMC, we'll take a look at that in a minute. That could be good. EU Commission. Okay. Oh, I'm running out of batteries on my headphones. We might have to cut the stream early. This stream, but we finally got it working. But we might have to cut it early. We'll see because the batteries are going dead. Zach's investment ideas feature highlights. European regulators probe Google. Pulls McDonald's reviews. Google partnership with Intersect Power and TPG Rise to develop industrial parks with gigawatts data center capacity. OpenAI releases text-to-video model Sora for text-to-video model Sora for ChatGPT Plus and Pro users. Oh, I'm one of those. That's cool. Tech stocks mixed in afternoon trading. Okay, so this was yesterday. Consumers are diving into AI. ByteDance reportedly seeking to block law banning TikTok, pending Supreme Court review. Google unveils new quantum computing chip. That's probably it, huh? Maybe. Sweden Molding Media. Google says it has cracked a quantum computing challenge with a new chip. Okay. That might be it. Yesterday. See if there's any earlier news. Yesterday, Google, Microsoft join Alphabet attracting. I think is a trending stock facts to know. Okay, I think it's probably that. So what's what they say? Has overcome a key challenge in quantum computing with a new generation of chips solving a computing problem in 5 minutes that would take a classical computer more time than the history of the universe. Like other tech giants such as Microsoft and International Business Machines, IBM, Alphabet's Google is chasing quantum computing because it promises computing speeds far faster than today's fastest systems. While the math problem solved by the company's Santa Barbara, California Quantum Lab does not have commercial applications, Google hopes quantum computers will one day solve problems. Blah, 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 blah. The results released Monday came from a new chip called Willow that has 105 qubits, which are the building blocks of quantum computers. Qubits are fast but error-prone because they can be jostled by something as small as a subatomic particle from outer space. What the fucking shit? The stuff that we're inventing now. Oh, God. Hey, Michael. The stuff that... Listen to that again. The results came from a new chip called Willow that has 105 qubits, which are the building blocks of quantum computers. Qubits are fast but error-prone because they can be jostled by something as small as a subatomic particle from outer space. What are we doing? What is this? Like, if God doesn't want us to make this, it might not work out. Like, what the fuck are we messing around with here? I think, oh my God. That's hilarious. As more qubits are packed onto a chip, those errors can add up to make the chip no better than a conventional computer chip. Well, that sounds ridiculous, the way they just said that. So since the 1990s, scientists have been working on quantum error correction. Okay. In a paper published in journal Nature Monday, Google said that it has found a way to string together the Willow chip's qubits so that error rates go down as the number of qubits goes up. So it's sort of like fault redundancy, I think, what they're saying. The company says it can correct errors in real time. It keeps that in real time. Well, that's good, but it probably does take a moment. And was that in real time? Where was that? The company also says it can correct errors in real time, a key step towards making quantum practical. We are past the break-even point. Okay, meaning they're increasing qubits without proportionally increasing errors at the same rate. Is essentially what they're saying. In 2019, IBM challenged Google that Google's quantum chip solved a problem that would take a classical computer 10,000 years, saying the problem could be solved in 2.5 days using different technical assumptions. Google said it took some of those concerns into account in its newest estimates, even under the most high-tech. I don't know if this is what's driving the stock today, by the way. It's an interesting article. Hey there. Some of the Google's rivals are producing chips with a larger number of qubits than Google. So, that's so interesting, though, that the industry of quantum computing and AI, those two industries, I mean, this is like, the birth of computers, but, personal computers and the expansion to the entire world and everyone on Earth in like 1980, or the 70s, late 70s and the 80s. And now, Apple's, 1,000,000% higher. So it's like, you may want to get into some ETFs, some quantum computing ETFs that, you'll, as far as investing goes, and some AI ETFs for savings, because as a whole, the industry is obviously going to do well. Trying to pick the actual winner, I mean, you're going to have to know kind of like about that particular product or service. You're going to have to like really be able to make that judgment. What was I just doing? Oh yeah, so I'm going to pull up Google now. I'm going to set my entry it's 183.26 in pre-market, 183.26. And my stop I set at 175. So that's like right here. And now I want to set up my my exits. I got to set up 6 exits, which is half of my 12 shares. Spread across, so 3. So every $33 for me is what that works out to be. For you, it would be different depending on your risk unit, your R risk unit. But for me, that's, yeah. So I set those up. Okay. And then the stop loss at 175. Perfect. Now, technically, we can move on. I can move that into my pilot folder, pilot positions, starter positions. And we can, we'll hear those, taking profits as it progresses, if it progresses. We do have Apple, and it looks like Apple's doing well this morning. It was doing well yesterday. Okay, well, it's elevated and opening up above highs. Excuse me. Up above highs, just barely. But, when things are moving and extending, running, that's not when you get in them. That's when you take profits. You take partial profits as they go up like that. And that's what, and you want to be getting in during pullbacks or breakouts from pullbacks or cheat entries in the pullbacks when it looks like, it's turning around. But not now. So just FYI, don't get all excited about Apple right now. You got to be already in it. I'm already in it. And, even then, it's still just a pilot position. I'd love to convert that one. Well, pre-market, we got 9 minutes before the market opens. And pre-market, we've had a down and then mostly up response to the morning's economic data that came in at 8:30. I got to double check if there's any other economic data this morning. Like at 9:30. No, not really. Tomorrow we get inflation rate, CPI. So that's a big one. So the market might be a little bit muted and low volume today. Waiting for tomorrow's CPI numbers. But tomorrow's CPI numbers, yeah, they will come in the morning at this time, pre-market. So, there's no need to go be putting your money in front of on the train tracks thinking it's going to go somewhere when it might get hit by another train, it might be hit by. So don't try and pick direction today, and that's why the volume on the market today will probably be clamped down a bit, which is good. That'll probably stop some bleeding. Or, there could be some assumption there, and then smart money is going to try and de-risk in front of that train event, CPI coming out tomorrow. It is predicted to be, we'll go over it in the morning, but and it's coming tomorrow. It is predicted to be 2.7%. It was previously 2.6%. So we're expecting it to be a smidge higher. So we have a little bit of a gloom expectation about it. Minor, 2.7 versus 2.6. And then Thursday, same time in the morning, is PPI. And PPI is more of the leading inflation indicator, really. But CPI is the big, huge headline number. And so it's the one that tends to move markets a lot. But PPI can and has moved markets just as much. What you can get is you can get this just like multi-whipsaw type action. You can have one reaction on Wednesday and then a contrary reaction on Thursday. There's two different ways. I mean, it's a coin flip, right? It can go well. I mean, even the coin can land on its side like a nickel. So, so there's three ways that coin can go. But, if you're going to hit heads on inflation on Wednesday, and you might get tails the next day, or you could get both heads, or you could get both tails, or you could get tails and heads. So it can go a lot of different ways. So it's not a good idea to be guessing, because you'd be guessing right only one out of at least four. So 25% of the time. That's not really a good enough setup to reliably risk off of a 25% chance. You need 28, 30, 33, 35, 40, 50, 60% chances you're going after. And then hopefully those chances provide 2-to-1, 3-to-1, 4-to-1. If you're getting 3-to-1 on something, then okay, it does provide a 25% break-even point of probability needed in order to be profitable in the long run. But you're better off with better than that. And if you're trying to guess both, so you can get the direction right by Friday and follow through the next week, and then I'm going long on Wednesday on this CPI report, or I'm going short, on the CPI report. Well, you're probably going to be, it's just a bad idea. You're not going to be able to take that kind of a guess, and that's why smart money doesn't. Because the money flows from dumb to smart. Typically. All right, so so we had Palantir blow off yesterday. We had App with a pretty strong differential between its high and the low. That was a 20% differential. And then from the close to close was 15%. That's pretty strong. If I go over here, it can tell me what the measurement on App is every day, expectation-wise. ADR is typically 7% per day. It did 14%. It was a pretty wide day. It was a 14% wide day, but from close to close was minus 15%. The ATR, that's more than the ATR and the ADR. So it was pretty strong, move yesterday. There's App, and then there's Reddit. Reddit also. But it opened gapped up. And so it even closed up, Reddit. But it also had a wide day, very wide from low to high, 15% versus normally 7%, very similar to Reddit. And then again, Palantir, normally 6%, put in a 14% wide day. And then here's App again, 7%, 14%. So you can see some of the leaders, some of the strongest leaders got exhausted and sold off, and money was pulled out ultimately. Now, how they react from here remains to be seen, and we'll have to see when the market flows today and tomorrow. And a lot of these things can be taken on a weekly basis. You go over to the weekly chart, and you can see things still look super on App, but it could come down and base for a long time. You never know. I mean, this one here, this base here was 133 days long. It doesn't look like much because I'm on the weekly chart, But before prices kept going and it started pulling back and it was over as far as progress goes, 126 days. That's like 4 months. So if things are going to soften up here, that might be what we're looking at, is a period of little while there. I mean, we are predicted by the end of the year to hit a particular mark up here on the market. You know, Santa Claus rally, maybe it's coming. But it could be mixed, you know, it could be choppy and difficult to get on up there and then fulfill that prophecy. But also the prophecy doesn't exactly have to happen either. I mean, that's the average expected result. So maybe we're going to undershoot it, you know, and another year we'll overshoot it. And then that makes the average. So, you know, you put the target there and then you have a certain probability spectrum, plus or minus, away from that target for expectation, seasonal expectation based on prior years. All right, we are looking this morning at gels, QURE, QURE, CMRX, CPIX. I wonder if this one QURE is quantum related, and that has something to do with, it's just a sympathetic move off of Google. Maybe they buy some things from them. So let's take a quick look at what QURE is, since we know Google is potentially, I might have the news wrong on that, whatever's moving it, but QURE might be up because of something that's going on with Google there. No, this isn't even a pharmaceutical company. It has nothing to do with quantum. It's cure as in curing a medical condition. I think it's Parkinson's research is the news that's going on with this company, QURE, which is cool, which is great. Where is it? Price and pre-market. I think it's way up. Yeah, it's way up here. That's definitely bottom reversing. But every time it's done that, you know, it's faded almost 100% of its move. So it doesn't have a good precedent for being worth getting into. And, you know, it's biotech. Try to stay away. Okay, market's opening in 20 seconds. So all in all, you know, smoke them if you got them. What I mean by that kind of is if you have positions, you know, be watching them and be managing them. And then it just depends on how the day goes, whether or not we want to get into anything seriously. All right, here we go. All right, looking around, let's see if there's anything that requires my immediate attention as far as pruning or cutting, anything that's nearing a stop. I mean, it looks like nothing's really in terrible shape right off of the open here. I could be wrong about that. I'm looking. Sometimes it takes a moment for your positions to adjust on the statement. I guess the strongest move, and it's really not that bad, is from LX. Something I'm in that I'm up 56% on anyway. And I've been waiting for it to form some kind of a base so I can get in some more. So that one's fine. Here's two strong ones, but these are larger positions, so that could be why. But Snow and Carvana, I got to look at those. Snow. Okay, let's take a look at that. So you can see it's a little bit pulled back this morning and selling off a little bit, but above my break even, to say nothing of my stop. All right, so that's Snow. Carvana. Carvana's hitting my break even. That is not my stop, however, yet, even though I have increased the position size on that. The way I set it up, I did not move my stop too aggressively, too high. I'm giving it some breathing room. Okay, so we have those. Take a look at the market again. Let's see how we're opening. QBTS, Qubits. I'm pretty sure that is a quantum related company. Let's go take a look at that. QQQ is moving up off of the open after moving down off of the open. It's a little bit whiplashy. Let's let that play out for a minute before we really try to say something about it prematurely. Qubits, yeah, this thing, D-Wave Quantum. This one's an incredible move. What is this move right here? Was 80%, and then in total, in just like 7 sessions, 170%. Then it breaks out and moves 75%, and then it breaks out and moves 42%. Boy, this Qubits, I want to be in it. I can risk at least a 250. So let's go over there and get some Qubits, which means I can get what? What's the math on that? 100 divided by 2.5. Wow, the new thing here is not working in Spotlight. 100 divided by 2.5. Oh no, they got to fix that. I got to bring up my calculator. What's 100 divided by 25? 100 divided by, I don't know, 40? 100 divided by 2.5? 40. Okay, so I can get 40 shares of Qubits to a stop of 250. I might even raise my stop by the end of the day. We'll see how it goes. Okay, I can just go day on that. Why am I not getting a fill? This is strange. Qubits. I put in a market order, so unless it's halting, which it could be doing, why am I not getting for this NYSE? The NYSE was slow. Sheesh. Okay. So now I got to get 10 2-share exits. That would represent 50% of my position set up. So at every $40, at every $20 point, 25, yeah, at every $20 point, those in, and it will take those profits for me automatically over the course of time. Sometimes it's the same day. Okay, so that's 20 of those orders, and I have 40 shares, so that's 50% of my position, and the other 20% I put on a stop loss too, 2.5, is that's what I was talking about. So 100 to 2.36, that's fine. And now I just got to mark it up. Qubits. I'm already in Google, but let's just put that up here on the side so we can keep an eye on it at the corner of our eyes. There we go. It's moving. So you guys on Google, that's a nice trade. $10 of risk to 175 stop. Qubits. All right, I got to mark this up. I think I already marked up Google in my thing. In my trading view. 487 is my stop. And I'm putting my stop way down here at 250. It's, totally safe. And so that's why, maybe by the end of the day, depending on how it performs, maybe I'll raise my stop up to underneath this 2-day push to 288, or potentially even be brave enough, depending on how big the push is today, if there's a big push, to put it underneath 380, underneath this second push day. But I don't think I'd get so cocky as to put it underneath this little pivot low here, this little V. That's just not enough. I mean, you can see how much safer it is to put it underneath this base than it is to try to expect a little V to hold, for the next year. Like moving forward, like what do you know about the next coming days? I mean, they could fake out, and we have a pullback like this, and then boom, you're out. You're knocked out of your trade, and that's a loss, all because you just didn't assess the potential properly. The potential being that you want to probably hold this for a while, and so you'd rather want to stop down here at a more plausible point, so you could be in and even like doubling up, mid-January, something like that. QUBT. I have that right. No, I don't have that. QUBT. So we're getting other quantum computing companies also. I want that one too. I mean, I like this field, and this is a gorgeous chart. It ain't perfect for the entry, and it's a little bit funny up here. But if I just risk down to $5, I can open risk here. It's perfect. Qubit. So it's at 760, which is roughly $2.50 above a $5 stop, which I just did the calculations on, which is 40 shares. It's roughly, I'm probably $105 of risking here. So I'm going to grab that. Then I'm going to set up the same thing. 2 share exits every $20 on Qubit. Now, where's my order? 764. It's actually flying away from us kind of fast. I'm going to get in there, though. I'm going to wedge into the bid and ask spread. 66, 67, 66, 68. It's getting away from us. I really should probably have bought a market order here. Come on, don't do. There we go. Yeah, I was about to switch to a market order, so I ended up getting 770 fill, and now everything's pulling back and flipping around. Doesn't matter. I have my entry, and I have a very nice wide risk to stop of $2.50, and now I can set up all of my exits. So I just heard that one come across a squawk. It's another good idea to have a squawk going. You have your scans going, you have your squawk going. If you want to watch the news, that's fine. Have a particular website that streams ideas, and just you just don't want to be not in the know. Bitcoin pulling back a little bit hard right now. What's going on with Apple? I'm going to go check my one stop. Check Apple. What are you doing, Apple? Let's refresh. I think needs to be refreshed. I'm not seeing any price change here. What's going on? Yeah, I guess oh, that's a daily chart. Oh, okay. Give me like a hourly chart. All right, so it's basically Apple is basically at where it was. Okay, and then Hilton's pulling back a little bit, but nothing too crazy. Well, actually, that's a daily chart. Okay, it is what it is. All right, so over on Qubit, now that I've got entry, I'm going to set up those exits. Move on. It seems like everything's moving along just fine in the port, so we'll look at more positions. And today, I'm not treating today as like an entry day. This is a management day, a take profit day, a rotation day, risk management day. But there are opportunities out there. As you can see, I just got into two stocks as pilot positions. I'm setting them up right now, all the exits. So the day is not devoid of opportunity in getting in, but don't force it. Make sure what you're doing is it looks nicely set up. 489, boom. See, 112. I was saying like maybe it's 107 or something. That's fine. All right, so that's Qubit and Qubits. I'm going to throw both those into pilot positions. Boom. And boom. Okay, I'm up on 8 out of 9 of my largest 3E positions. So when I say 3E, that means 3 entry positions. Like those positions have been amassed via 3 entries. The initial entry, 1E, the second entry, 2E, and the third entry, 3E. So we'll see how far that can go. 5E, 7E, 10E. You don't necessarily you're not looking to make money necessarily on, let's say you get to a 10E. That'd be a huge position. It would, massively snowballed. But you're not looking to make money necessarily on the fact that you now have a massive position. So when it goes up a lot, you would just sell. Because the whole idea of how you got it to a 10E is because, you wanted to get it to an 11E. You know what I mean? It doesn't ever end as far as the snowballing goes. However, what you're really amassing those for is because of the skimming. So as the thing progresses, you're going to get that 50% skimming. And then you have this very rare backup plan. Sometimes these things have a vertical. They just go vertical and they create this exhaustion extension. And usually, as part of what I've taught you, you're taking out partials along the way. Maybe that's across 3 days where it's just flying and it's just going parabolic and vertical. And now you're down, you've whittled out of your position, and you should be proud of doing so. As it goes parabolic and vertical, you want to run out, because, and then maybe it gets really vertical and you miss some of the final days, and you're not going to kick yourself if you wind up getting all out way up there past the 2.1. It's like at 7-1 and you get all out. You simply have to say, well done. Good job. It was a trade. You managed it for half a year. It went 10E and it exhausted out on the very rare exception, and you got out at 5, 6, 7-1 on your risk on that, and you had skimmed the rest and it had built up really big. Well, that's in some sense even better than staying in, letting the things pull back and getting an 11E and then continuing to snowball, increase size, and then skim. Eventually these things can supernova out. They can just, right? And in those moments, it is part of the system for you to exit. See, here I am. I'm having to release my hedge from yesterday. Just a minute, guys. As the market moves up strongly, now I have to release my hedge. There we go. Boom. From yesterday. And that's why I told you, it's whenever you put the hedge on, I end up losing money. But in a bull market, it's really hard. For the last year, I've hedged maybe 5 times, and I just said, you know what, just forget it. I'm just not even going to hedge anymore. I'll just take the gut punch, and the next day or the following day or in a couple of days, things come on back, But sometimes you got to do what you got to do. However, this hedge that I just did yesterday, I just reversed the money that I made yesterday to protect myself by exactly as much as the money I made yesterday to protect myself. So in other words, I protected myself at no cost. I did. I got in and got fully protected for about $1,000. And then I got out giving it all back just now. And the thing is, you have to be really quick with those hedges, because otherwise you can get in this situation where you're giving back more. You put on a hedge and now you're giving back more. What are you doing? That's not good. If you're hedged and then your hedge comes back to break even, you got to release the hedge. But ideally, you want to get that hedge off before it even works its way back up to break even. If you, positively 100% think that you no longer need the hedge. I actually, even right now, don't think that I know that yet. The head, by the end of the day, the market may fail out, or tomorrow's CPI might be a disaster. Who knows? But you don't have to hedge every day. When you're in a bull market and you're building up positions from pilots and you're sizing up and all that is happening, you're going to degrade your performance by hedging. That's just, the physics of that, if you will, the stock market physics of that, if you will, are, more than talking about it right now. Maybe we could save it for a class, but you don't need to hedge in a bull market. You need to hedge when there's a serious risk going on. I was lucky to be able to just slap a hedge on everything yesterday because there was a lot of question marking going on, and that's fine. And I got out now today so no risk. It was perfectly fine. But, had there been, let's say, China posturing against Taiwan with naval warships and the market's dropping, there could be some expectation that the next following days are going to get even worse. So it's kind of not outside of the realm of reason that in this bull market we have a more serious pullback that slapping a hedge on might be okay for, but you've got to be able to manage the hedge if you put it on. And that's not as easy as it sounds. It's easy to put a hedge on. It's very hard to take it off without it being a net negative that you did the whole thing. You have to be really quick and limber about how you do it. So don't be too quick to just hedge. When you're in a bull markets are amazing, resilient creatures. So even if you look at, like I was doing some Bitcoin analysis in the group, even if you look at Bitcoin has not been bearish since like May. Well, no, I'm sorry. Since like, what was it? The bottom essentially was August. And even that was kind of just a blip, So really the bottom, which kind of triple bottom, started in July is what it was. Ever since July, Bitcoin essentially bottomed and then reversed out. And then, and it has not really violated pivots. It's been all higher lows. Every pullback has resulted, that broke a high, has resulted in higher lows. So that's an uptrend, an unbroken uptrend. So Bitcoin is bullish. And Bitcoin is what I consider to be one of the leading indicators on the market right now. I don't know why that is, but it just is. I don't have to really speculate. I can see what's leading and all that kind of stuff. All right, looks like Palantir, one of my bigger positions, is reclaiming some of yesterday's pullback. Technically, oh no, never mind. I was going to say technically when a stock gaps below its low from the prior day, but it could be the close. It could also be the close like it's doing right now. And then reclaims across all that. That's technically an entry signal. So that's crazy as that is. So in other words, this, because it's swiping across yesterday's close, starting from below it, creates an entry and likely that it will not go below that lowest point there moving forward. I'm already in it. I don't want to like add on or anything or increase risk on my portfolio right at this moment. But that's a good sign. It's good to know these things so you can see, one of the leaders is putting in a good sign. And it's probably, fingers crossed, going to be great from there. But I don't have to do anything about it. I can just say, okay, well, that's great. Okay, leader examined, looking good. What about app? How's app playing out? App, almost roughly similar. Not quite putting in that same signal, but combined with other leaders, you have to say to yourself, maybe that is the signal, though. Maybe it's a combined signal. Sometimes you can get into something else because something else is doing good. And it's giving the signal, but not this one. You can get into A because B is putting off a signal, and A and B are moving the same, but B is putting off the signal, and you can trust B's signal, but it's not happening necessarily perfectly on A, but it's showing up almost like very similar. It's just not quite there on A. So B signals for A. Then we can go over to Reddit. Reddit, it's practically breaking out above the body of yesterday. Reddit's just like full on continuation. No, I did not get knocked out of Reddit yesterday, did I? No, in fact, that's one of my 3E positions. That's one of my biggest positions, Reddit. But I did, and I didn't get knocked out of app either. The question I have, though, is did I get knocked out of Palantir? No, I didn't get knocked out of Palantir either. So I'm still in the 3 leaders that are now signaling they're going to come out of this just fine. Tomorrow, a big red candlestick like today could happen. Not everything's 100% certain. But this is a good signal. I find it to be reliable. I don't know if it's more than 50% of the time. I think it is. But by my experience, I think it is. I think it might be around 60, 70% reliability. But that does mean that, tomorrow could be red and another sell-off day, and CPI could completely fuck us, and then PPI the next day. And, you just don't know. But slight economic adjustments to the market that cause a lowering of the tides and a raising of the tides maybe doesn't necessarily change that this is a great time to have your fishing boat and go out in the morning and get some fish and be on the Palantir boat, venturing out, even though it's a little bit of a lower tide. So slight economic adjustments because of this economic report and this economic report doth not a bull market endeth, and a bear market starteth. A bull market is a bull market because of huge cyclical economic factors, like really big ones, like this whole rate cutting cycle that the Fed is in. I mean, it's just barely now just kicking off the start of the business cycle, which has front ran for the last year and a half. As we get through it, maybe it's going to chop for a while because we front run a lot. That could definitely happen. But a bear market, it would be really hard to have a bear market front run. It would be like guessing there's going to be an economic meltdown 8 months ahead of it actually happening and showing the signs of it. And besides, everything's going to move accordingly. So your positions will show those signs ahead of time, and you'll be able to act on them and turn, and dock your boats, if you will. And what do they call it? Take it out of the water and store it. Go store your positions, your vehicles. You'll be able to do all the preparations. It takes like months to turn a market into a bear market. And crashes and pullbacks and corrections don't necessarily do it. But crashes, corrections, and pullbacks are part of bull markets. But they don't stop the bull market. They just temporarily sideline it. And then things get rotated, and some companies get caught in the economic whatever caused the crash, and other companies don't. Like what happened with AI. Remember there was a big deflation of it a couple months ago because everyone said, Microsoft said, we're not really seeing the monetized results from AI as we expected. Well, that's what happens with new technologies is, it takes time to adopt these things. So, that could happen with whatever, there could be something like a report like that. And then it deflates some of what got inflated. Meanwhile, some things will be doing well. So, that's why we just got to always constantly have our finger on the pulse of all the different things going on, stocks that are doing well. Essentially, we are chasing stocks that are doing well. So, we've got our finger in the right pies. Just can we get an assist from, the macro is what it's called. Take some cuttings. Well, yeah. No, I won't be doing that necessarily unless we have a strong day on something, which I might have. I'm looking. I have some. Yeah, I mean, Palantir is doing pretty well here. Probably still under some pressure is Snow. Yeah. So that's under a little bit of pressure. And then also ALB, a recent pilot position I opened. But look at my distance to my stop. Like I'm down not even a quarter to my stop. So This is why, putting a realistic stop in and sizing correctly is so important to being able to muster some of the punches to the gut and in the ribs and even the face and even getting knocked down. That's why it can be important. If you don't have your stop in the right place, it's like not being fit for the fight. Your stop is how you stay fit for your fight. And if you put your stop too close, then you're closing in the corner of the ring. You're putting yourself in the corner of the ring and you can't get out. You're cornering yourself. Don't corner the trade with too tight of a stop. Does that make sense? Gels is halted down. Okay, CMRX is moving up. I really did not like this daily chart on this one. Yeah, it's just massive overhead. And I didn't even look at the dilution. There's probably, I'm guessing, on a shitty company like that, some dilution issues. Let's see. Well, no, actually, there's not. They did a 28% dilution once when they got really highly valued. It would have to triple 300% from here, which, these stocks can do that sometimes in order for that kind of a probably behavior from the company to happen again. So that's good. It's somewhat safe from the dilution issue. So maybe CMRX is not so bad, but I do see just massive, just like it just sucked everyone down, and there's been people waiting for years to get out. This is a massive overhead. We don't like overhead. We like blue skies. See, CMRX is talking about it. All right, now, as far as if there's any opportunities today, I don't know. But let's take a look at some of the things on my scans. I have about 500 results here. And at the top of those lists, we could take a look at some of those. WBD, Warner Brothers, okay. Warner Brothers is having a good day today, but it has been moving, and so this is an extended moment for it. Grab. We got into that, and I doubled up. I guess I have a 2E on that. Where is it? Grab. No, somehow I must have got knocked out of it or something. I don't appear to be in it, or possibly, I don't know why I put a stop here then, but no. Okay, I probably raised the stop during the trade. So it's a 1E, I think. So grab, let me just double check. I have that. Yeah, grab, and I'm 5% on that. This grab, is putting in a nice mature base area here. So maybe once it takes off and breaks out, we'll be able to raise the stop on that to about $5 roughly. And that'll allow us to add and create a 2E out of it. That's grab. What was I going to say about the others? There was something else. Oh, SN. I wanted to show you Shark Ninja. Beautiful long-term chart since its IPO. And I do have a position on it, and it almost got stopped out. Just looking at it, it looks like it would have been a lot safer to put the stop lower, doesn't it? Down here. I guess I was hopeful that it was turning around when I got in here because it broke this level here. And so in that sense, it kind of 4-point uptrended. And actually, therefore, I should put my stop here. So this is why I might get stopped out on this before it continues. But I'll tell you what, I like SN, Shark Ninja. I think good stuff, and preferred by chefs and all that. Good products. Let's look at the revs. Yeah, the revs have been there, doing over $1 billion a year annually. Yeah, they're growing. Their operating margins are coming down year by year, so that is an issue. Well, this year though, it looks like they've been elevating them. this year, but annually it hasn't been a pretty picture, ending at an average of 4%. But right now in the last quarter they did 9%, prior quarter 5%, prior to that 10%. So that's pretty decent. What you don't want to happen, what you don't want to see from these companies with charts with a downtrending internal operation efficiency margin like that, is it approached negative, because then there's no profits. Like whatever they're doing, they've learned to take all the money that's been coming in and growing the company and use it all. And that's no good. You know, keep the profits up, man. Don't be sucking all the profits dry. So that would cause a downturn on Shark Ninja if it did that. So yeah, it does need to keep these internal margin efficiencies up around 10% like that. It would be great if they could even grow those a little bit more to a bigger margin. All right, well, it's 10 a.m. How is Apple doing? Is Apple taking off? Or yeah, Apple's a little bit pulling back. So I think the market in general today is going to take it easy. It's going to be careful of the fact that tomorrow's CPI numbers in the morning, and that the next day's PPI numbers in the morning. And then it will take the week as a whole, depending on where we end up by Friday. And we just basically got to take it day by day. You know, every day is going to be a little bit different. We got to take it day by day and follow logical thinking and bring in as much as we can into all of our decision making, so that it's not too narrow-minded, and we're really, you know, it's really holistic. We're taking a lot into account so we can hold through some of the tough moments, ideally, or cut things that maybe we can cut. I don't really see a need to be panicking. What I see in a bull market is the need to try and find excuses to stay in. But you can't make that excuse make you lose money you didn't plan to lose. So it can't be that. It's just you just need to go through sort of the daily reassurances, or be on alert to get back into something you just got stopped out of. Stuff like that. So that's what these next few days are going to be like. So there you go. I'll see you guys back in the group. That's the morning show, and orientation should get you fully orientated on this market today and tomorrow and the next day and this week. I think we've got this pretty well covered. It's good to have experience. You know, you don't have to be too scared every day of what the heck is going on out there. And thanks for tuning in. All right. Catch you guys back in the group. Where is my mouse? There it is. Okay.